Oh, take a look outside. It's going to be another beautiful day here in South Florida. Good morning. Today is Thursday, May 5th, 2022, and I'm Kenny Polcari, your host of the party. So what is it that we need to know today? Oh my God, Jay ignited a rally yesterday, promising that 75 basis points is not being actively considered. Algos went into overdrive, right? Stocks gained nearly 3% across the board. Expect that presentation to be picked apart today, sentence by sentence. Oil continues to surge higher as OPEC meets and reiterates that they cannot replace banned Russian oil from the markets. And what do we have for dinner tonight? Well, it's a Memorial Day salad, an Orzo spinach ricotta salata salad. Easy to make. Look, here's a quote from yesterday. I'd like to take the opportunity to speak directly to the American people. Inflation is much too high, and we understand the hardship it's causing, and we're moving expeditiously to bring it down. Well, that's funny because you moved expeditiously to bring it up as well. So how'd that work out? Anyway, the markets were churning all day. The S&P trading around the flat line for most of the day until about 2:40, soon after his press conference started. And then he said this in response to Steve Leitsman's question from CNBC. The Fed is not actively considering raising interest rates by 75 basis points at a future meeting. We've raised 50 basis points today, and the feeling on the committee is that we could raise 50 basis points for the next couple of meetings. Okay, bang. That statement sent the algos into overdrive as the relief rally began. The assumption now is that Jimmy B, the St. Louis Fed president, spoke out of turn, that his multiple 75 basis point moves, his comments a month ago, were not a committee favorite, at least not now. But all I'm saying is pay attention to the terminology, because you have to ask, is not considering the same as not actively considering? I mean, I'm just saying. I think he left the door wide open, but it makes no difference. The algos loved it, and apparently so did some of the traders, especially those traders who had set themselves up for another decline to find a big short the market. They suddenly needed to run for cover to cover those short positions as prices surged, and the need to cover those shorts only added to the excitement when Jay said it ain't happening. By the end of the day, the Dow raced ahead by 935 points, or almost 3%. The S&P up 125 points, 3%. The Nasdaq rose by 400 points, 3.2%. The Russell gained 50 points, 2.7%. And the transports rose 485 points, or just over 3%. Every S&P sector was up more than 2.5%, with energy up better than 4%. Communications, basic materials, financials, and technology all up better than 3%. The 10-year Treasury prices rose, sending yields down to 2.94%, which makes no sense, considering rates are rising, not falling. But let that settle in. Some in the bond market are explaining it away by saying that the bond market had gotten ahead of itself, and that the idea that the Fed is not actively considering 75 basis points proves that point. Rates supposedly moved higher in the prior weeks on the expectation that we were going to see 75 basis point moves in June and July. But that has now been put to rest, at least until next week. Look, by July, the Fed fund rates will be 2%. By the end of the year, they're going to be expected to be near 3 or 3.25%. Inflation is still going to be near 10% if it's not already there. And I don't think it's going to show any signs of retreating. So I think we got still a conversation to have here. And the balance sheet, well, they're going to reduce it by $47.5 billion a month for the next 3 months. And then they're going to take it up to $95 billion a month starting in September. Now, reducing the balance sheet is another way to remove stimulus and raise borrowing costs. This comment was not new news. It was laid out last month. So the fact that this didn't change is a positive, because it's all about clarity and expectation. So that expectation did not change. So therefore, that was viewed as a positive. Now, next Wednesday, May 11th, we're going to get the April CPI report. What is funny is that when I looked at my Bloomberg machine this morning, it didn't have an estimate of what that number is going to be, which is a bit curious. Because you have to recall how strong the latest PPI report was, right? It came in at 11.6%, well ahead of the 10.5%. And all this means is that we can expect this month's CPI or next month's CPI to be up again. Why? Because rising prices at the producer level translate into higher prices at the consumer level. So let's not kid ourselves. It would be difficult to see how the CPI could be anything other than higher. Now, to be fair, though, some economists will tell you that it takes 6 to 8 weeks for the rising prices at the producer level to hit the consumer. So maybe we don't see it next week. Maybe we see it in the June report. Although one way or the other, even next week has to be at least the same, if not a tiny bit higher. In any event, I suppose you could play with the numbers. Maybe tell everyone that used automobile prices are in decline like they did last month. Well, that's great. Thank God that used car prices are coming down. But what about the cost of living, food, energy, basic supplies, housing? None of that is in decline. And in fact, is only getting worse. So make sure you focus on what's important in the inflation story. I mean, how many times do you go out and buy a used car? I mean, think about that for a minute. It makes no sense. Zero. Now, this morning, U.S. futures are down, which should be no surprise at all. Dow futures down 135, S&P is down 25, the Nasdaq's down 100, the Russell's off by 7 points. Expect lots of chatter today as analysts and strategists dissect every sentence and every spoken word yesterday as they look for some tidbit of information that may have been overlooked in all the excitement. Expect all of the bulls to point to the fact that they're not actively considering that comment, while the bears are going to continue to suggest that the Fed is behind the 8 ball. And yesterday's story will not be the same by the end of the month. Now look, it is good that the Fed even made a move. But many will ask, is the current path of interest rates really going to bring down inflation anytime soon? I mean, Fed funds are now at 1% as of yesterday and expected to be 2% by August and 3+% by year end. Okay, great. But inflation will still be near, if not more than 10%. So what am I missing? I guess I'm missing the idea that they think inflation has peaked and will be significantly lower by year end. I hope they're right and I'm wrong, but only time will tell. My sense is that inflation is not going to be significantly lower, if at all, by year end. Eco data today includes nothing dramatic, initial jobless claims, continuing claims, unit labor costs, but tomorrow's going to bring us the all-important non-farm payroll report. And after yesterday's disappointing ADP report, many are prepping for a weaker NFP report. New jobs created expected to be 380,000, unemployment at 3.5%, average hourly earnings up 5.5% year over year. European markets this morning are all higher. They're up across the board by about 1.5%. Investors there are celebrating the fact that the Fed squashed the hawkish bets, meaning they're not raising 75 basis points. I think it's ridiculous. The Bank of England is also expected to announce its 4th rate increase today to combat out of control inflation in that country. Oil yesterday rose by 5%, ending the day at $107 a barrel. And this morning it's up another 0.3 of a barrel at $108.15. It's about supply and more Russian sanctions. In addition, OPEC came out and said that it is not possible to replace the lost Russian supply to the market, which goes again to the supply issue. While at the same time, they're expressing concern that demand is going to slow because China continues to shut down their cities. I think that's absolute baloney. Now, while China might be shutting down their cities, just think what happens once they open them back up again, right? Demand will continue to surge. The world does not revolve around China, sorry to say. The S&P closed the day at 4,300, up 125 points, leaving 2 century marks in the dust, right? We left 4,100, we blasted right through 4,200 in what was a super excited relief rally. One that I think was a bit overdone, but it is what it is. I think as we move through the month and see that the eco data is not in retreat and that inflation is not in retreat, the conversation once again turns to the pace of rate increases. I am in the camp that the 75 basis point conversation is not over by any stretch. Unless, of course, the economy goes into reverse, which it just might, no matter that Jay tells us that we're strong enough to withstand multiple hikes, right? So if it doesn't go into reverse the way Jay says it won't, I think 75 is back on the table. The S&P is still well below all trendline supports and will run into resistance at 43.75, right? That's the downtrending 50-day moving average line. Remember, it's about sentiment. Did Jay really convince investors that they have it under control or not? Recall that there are some that have been calling for S&P to test as low as 3,800, 3,400, and some even calling for 3,200 before this is over. In the end, though, you just got to stick with your plan. Remain focused and stick with your plan. Okay, so Memorial Day is coming, and I love this dish, especially for Memorial Day, right? It's orzo spinach ricotta salata salad. You eat it cold, you serve it with the burgers, you serve it with steak, the chicken, whatever you're gonna have. You can eat it right out of the refrigerator just as a meal. It's great. Right? So as you're making your Memorial Day plans for the big barbecue, you got to add this salad to kind of the table where you're going to put all the food, right? You can make it ahead of time. You can keep it cold in the fridge, 2 or 3 days before you even need it. So you have plenty of time to make it. All right? It's simple to make. It takes no longer than 12 to 15 minutes max, just as long as it takes you to boil the pasta. So for this, you need 1 pound of orzo pasta. You need garlic, olive oil, fresh spinach. And then you need ricotta salata cheese and salt and pepper. Ricotta salata, you get in cheese. It's a hard cheese. You kind of scrape it, right? Now, you want to bring a pot of salted water to a boil. You want to add the orzo. You want to let it cook until al dente. Now, orzo will cook quickly. So 6 to 8 minutes is kind of what you should be thinking about for the orzo. While this is cooking, heat some olive oil in a pan, saute the garlic in the oil just so it takes on the garlic flavor. Do not let the garlic burn. Make sure you don't slice garlic. Remove the whole thing from the heat and set it aside. Now you want to cut the ricotta salata into small bite-sized cubes, right? Because it's a hard cheese, so you can cut it into cubes. Set that aside, but small, right? Like bite-sized. When the orzo is cooked, you want to strain, always keeping a mug full of water just to remoisten it. And return the orzo to the pot, add a little bit of the water back, mix it just to remoisten. Do not put a puddle of water in the pasta. Now toss in the fresh spinach on top of the hot pasta and the garlic and oil. Mix it well to coat, right? You want just enough oil to coat the pasta. You don't want the pasta bathing in oil. Now add in the ricotta salata, mix it again. Put it in a bowl and refrigerate it, right? It's done. It's a perfect side dish for any summer barbecue meal, or it's even good, like I said, just to eat right out of the bowl. Look, you can eat it warm right after you make it. Is that you can certainly eat it warm, but it is meant to be a summer salad. So typically you would put it in the fridge and pull it out so that it's kind of a cold summer salad. It is really good. It's simple to make, and if you've never made it, you should try it. In any event, it is Thursday, May 5th. We've got 2 days to go until the weekend. Until tomorrow, have a great day.